Well, I got a frightening one for you today. You know how that digital currency thing that you're currently using, and they said that they're really not going to do anything, but they're actually doing it? The IMF just admitted, which I don't know why they allowed them to admit it, so I don't think this video will last too long, because once it starts going, Google's going to pull this thing back right quick. But it has to do with the IMF. Hey, the central bankers, the people that puppet this whole thing, and this new digital currency they're getting ready to launch, also known as FedNow. And remember, what was it, 2020, 2019, when they had that bill that they released, right? The whole pass-through wallets, digital, we got your back. Well, listen to what they have to say. And I know, call me crazy, call me tinfoil hat guy, but at the end of the day, they got you. Listen.
The third way we think CBDC can improve financial inclusion is through what we call programmability. That is, CBDC can allow government agencies and private sector players to program, to create smart contracts, to allow targeted policy functions. For example, welfare payment.
I mean, it targets everyone, right? Everyone. And look, the sheep will run and say, give me my money, I am broke.
Consumption coupon. For example, food stamp. By programming CBDC, those money can be precisely targeted for what kind of people can own and what kind of use this money can be utilized, for example, for food. So this potential programmability can help government agencies to precisely target their support to those people who need support. So that way can also improve financial inclusion. Of course, I want to end with a caveat, because CBDC is not a panacea. CBDC cannot solve every challenge in financial inclusion. There are some aspects of financial inclusion is not related to technology. For example, financial literacy, digital literacy. So CBDC has to work with other policies together to try to improve financial inclusion. I stop here.
I stop here. But bravo, I don't care about that. I care about why markets go up. Why? You said markets go down. Yeah, I said it would go down, okay? And then I said in this zone, yes, it goes up. And then we have all these people that are leveraged on shorts. And we're talking hedge funds, like charts that I've never seen before. And they look kind of like this. I have seen them before, so I kind of lied. See the blue line way above my head? You see, going back to the early 90s, this is everyone leveraged also to one side. The market's only going to go down, which they are right. It will go down because we are currently in a tightening cycle. But in the meantime, well, everyone's like, it has to go down. It's going to rip higher. And how much higher, you ask? Well, I will show you. This is the S&P 500. If you want to trade it, it would be SPY. This yellow line is the kiss of death on the monthly. We got above it, bravo. We are safe. You are not safe. I'm showing this to you on the daily. Next, you see that blue line? I'm going to show you also how to make paper trading money on this, because I need this to be a whack-a-mole. This blue line is a 200-week moving average. And yes, it is. This is all found in my brand spanking new course on how to trade a bear market, because we've been in a bull market our entire lives. Here's a bear market. You can make the probabilities more money on the way down than you can on the way up. And definitely when it's capitulation, which I will explain in just a second. Also, $200 for it. And that's the lowest you'll ever see it, because I'm filming videos right now, Mark. Okay, so don't jump in and you see 20 and you're like, where's the other, where's the next 50? Where are they at? They're coming. I'm filming. And then when I'm all done, boop, price goes up. All right, so look at the 200. And I said it was going to do this months ago. I said, we're going to come down here. We're going to test that. We're going to test that yellow line. Did we test it? Yes, we did. We broke through it. Now we have the 200-week moving average. we came up. See, you make money going up, whatever percentage that was. 10%. Oh, we're going way up there. We're probably going to go up there and touch that white line. But right now, people are like, oh my gosh, it's a triple bottom. And hey, Skylar, will you do me a favor? Will you show me a triple bottom? Okay. Wow, the screen takes a while. Triple bottom. Let's see it. What do you got? That's not a triple bottom. But I think, and this is what I want to happen. See the red line? That's my Bravo 9. I want this sucker going, woo! And then we play whack-a-mole, right? On the way down. So come on all in. Everyone in. We found the bottom. Even though in a Fed tightening cycle, there is no bottom, okay? There needs to be a lot more. Also, you're going to see earnings. Do I have my white line over here somewhere? I'm going to show you because, oh, there it is. See that? That is when the Fed starts to tighten. It's about 12 to 14 months. You got to go out there and you're actually going to see good earnings, right? Everyone who is fundamentals, they're like, look at Nike, everything's great. We got to cross that white line. When is it? March, April? I think it's April of next year. And that is when earnings go bad. So earnings go good. You cross that line because it's all about stupid lines, right? Earnings go bad. We even win. B of A survey screams capitulation. Bravo, we are here. We have found bottom. That is capitulation. That is not capitulation. That's actually support and resistance, which I just filmed yesterday in the course. If you'd like to take a look at it, it's finding support, and it's going to jump on it, and it's going to jump on it, and then it's going to break. But it's okay. Maybe it won't. Maybe we'll go up there and hit that 200-day moving average, which triggers my next sell order. Okay, I can do this. Thanks, Mom. B of A survey screams capitulation with rally. Oh, rally win? Oh, I see. 2023, is it? Let me check my watch. See? No watch. Sentiment on equities and growth show full capitulation. B of A strategists expect stocks to bottom in first half of 2023. Hey, well, looky there. Does that maybe possibly line up? Probably not. Because guys, we have, look, recession, 100%, everything bad. Hey guys, I also need to apologize. We're getting on a flight. My audio didn't work. So if you feel like, you know what, Bravo, this video seems really rushed. Well, that's because it was. Because I uploaded with absolutely no audio. So my apologies for that. You're probably not going to be able to hear this right now because of a jet engine. I'm actually going to wish my daughter a happy birthday. So, well, you guys, there you go again. My apologies. All right, so we are heading down to wish JoJo flight attendant a happy birthday. So we'll do a I don't know. I gotta flip the camera around. Happy birthday to you. Happy birthday to you. Happy birthday, dear JoJo flight attendant. Happy birthday to you.
Wow.
All right, you guys, so I'm kind of hodgepodging videos here because they're so important, but I wanted to share with you something about the housing market, and wow, I am getting a lot of echo in here. All right, so I am going outside to film. The things about being like filming on YouTube. All right, so we got home buyer traffic is absolutely crashing. I'll show you the chart in just a second, but I wonder why. Could it possibly be because we have who? Mark? Thank you, Mark. Shout out to Mark here. Sorry, you don't. It's okay. You had it in your youth. Warns U.S. interest rates will, okay, let me just underline that, even though I can't, will hit 9% if inflation, oh wow, my head's right on this. This is, wait, hold on, let me move me down a little bit. There we go. Okay, so can you guys imagine that? 9%, oh, sorry, 9% interest rates is just going to collapse the housing market. And now let me show you something else. I just got this email. Okay, look at this. Home buyer demand. All you guys aren't running out there and you guys aren't buying? Isn't that so interesting how it just changes like what, 6 months? I'm giving this This changed overnight. Look, see down there, down in the corner now. We're looking at almost when it was lockdown, when you couldn't even leave your house. So, okay, so here we go. We are right there at that 2008 housing crash. It looks like we're probably going to head lower. Well, I mean, with, 9% interest rates, I don't think you guys are going to go out there and buy new houses or refinance. All right, so we have to conclude this video. We have central bank digital currencies. We have a housing market. I mean, come on, you guys. Is this not a collapse? Or what? We have the stock market. Take advantage. Let the market rip higher and make money from it. But at the end of the day, if you guys could do me a huge favor. So here's me walking in the park here in Dallas. If you guys could do me a gigantic favor, can you maybe like or subscribe? All right, I don't want to go down those steps. Nice background, right? Good audio. Gosh, I'll tell you, it could go from good audio to really bad audio within 10 seconds. Look, I'm going to open this door, and we have echo. Man, filming, lighting, everything. Thank you, guys. I love you. Take care. Apologies for all the shenanigans of editing and no audio. I'll see you tomorrow.